What is up, guys? In this video, I'm going to be teaching you how I go about trading with a fluid bias. This will help you become a more successful trader. You'll see me catching an amazing trade in this video and breaking it down to you. Are you tired of getting stopped out of trades because you can't recognize the daily bias? Are you struggling to choose the right direction for your trades? If so, you're not alone. Many traders, including myself, have struggled with this same problem. What if I was to tell you that I don't think having a strict daily bias is beneficial to you? If I could teach you step by step, would you be interested in learning how I trade with a fluid bias? So if you want to learn, keep watching. Why it's better to have a fluid bias, not a strong, super strong bias, because we don't know what the market's going to do, right? We have an idea of it. The fact of the matter is having a fluid bias is going to allow you to trade the market without a bias. I don't know about you, but have you guys ever had a super strong bias and then the market do the opposite and you end up getting punished for it? Boom, look at that beautiful fucking trade here. In stream today, on stream in my Discord, we said that if it breaks this balance area here, that I would be bearish. All right, so here's your balance area. Did it break the balance area? No, it didn't. It held it like a fucking rock, actually. In that way, it allowed us to be fluid with the market. Let's go ahead and go into the slides and break down how to do this. What steps do you need to take to make sure you're doing it right to benefit from an if-then statement? Like right here, for even example, we could use above here bullish, below here bearish. That would be an example, but I want to go into the slides here and look at them. Okay, so this is the start of that move that just happened. On stream, this is right where we had left off. Above here is a long, and then below here is a short. It's pretty simple, right? So the end of day drift is like this, but we add a time element into it just to increase the chances of success. You can use this on pretty much any setup or scenario, and it probably will help you in one way, but I think it is much better than being like, I am bearish no matter what happens. Like, does that really make sense to be like, I'm going to be bearish no matter what takes place in price? No, I mean, it is not very logical in my opinion. So step one is going to be define the areas and why. In the example we're going over right now, which was right here, you can see that we define this as a balanced area, and if broken, like close below, it will lead to price going to at least here. And then we had found a small balanced area on like a 5-second chart that was in here, right? So the idea was that if price was to break above here, then it was likely to go here. And did price do that? Yep, it sure did. So now that little example we were just like talking over, we said if price goes above here, we're bullish, and below here, bearish. So this will be a good example of a trade using this logic. You could even go as far as like saying, I'm going to put a buy order here, and then that way if it goes above there, I'm automatically triggered in. You could do it that way. I don't personally do it that way, but you definitely could. Okay, so define the areas and why. We've done that. Let's go on to slide 2. All right, in this slide, you can see that price is in fact breaking over that area. How do you enter? There's a couple different ways you could do it. You could just do it the way I showed you, or you could simply buy on a pullback, which if you bought right here on this pullback, to risk below the area would be about 10 points. Entry size needs to depend on risk. Like how much do you, if you enter right there, how much do you have to risk? To down here it'd be 10 points, that's $200. That's quite a lot of risk. So it's better just to enter one contract and then add a second on a retracement. Okay, so price is about to bust this. Or you can front run it, right? So what do I mean by that? I mean, like if you think price is going to go up there, just kind of like wait for it to start heading that way. It's formed a swing low. Go ahead and enter one contract. Our stop will just be below this low, which is framing the trade with really low risk. So I'm risking 3 points instead of down to here, which would be quite a lot more because I'm front running it I'm keeping my risk at a smaller point, like defining another area in the line in the sand kind of area based off of market structure. Okay, and then price pulls back. Do we panic? No. Why? Because we have our line in the sand. Price has not broken our line in our sand, which would be right here. So below that area, close below it would be a violation, and um, we would then be stopped out. But because it has not, there's no reason to panic here. And then the result is price just blasts up. I definitely think this is a much better way to do it, especially if you can frame your risk, in a relatively responsible way. Okay, so price is breaking above. Now, if I hadn't already added one on, this is where I'd be adding on a second. My stop would probably go below here. And then my mental stop, if it came down here and I didn't like how it looked, I would exit there. I think that's the best way to do it. Have an emergency stop. This is like the world is ending kind of stop loss, if you get what I'm saying. This is just for emergencies. And then my mental stop would be here. In this situation, my mental stop probably would have been below here, and I would have exited as price came down here and then re-entered once it started to curl up there. All right, let's see what happens here. If you had a short bias here, you would not be able to catch this trade. You would be thinking price is continuing lower. All right, let's compare these two side by side. So if this is kind of like the line in the sand, like if this happens, I'll do that. That's kind of the statements we're using here. And then bias. So if this is going to let the market tell us kind of what to do, and then bias, you're predetermining what the market will do. If the statements kind of allows for fluid thinking, you're not really stuck on one side. And bias is definitely, you're stuck on a direction and that's it. I feel like bias is pretty limited. You're limited in one direction, one trade style. If this year, it's pretty much unlimited. You can find many, many opportunities. As you see me trading, I'm very fluid with it. I don't care if it's up or down. It doesn't matter to me most of the time unless I get stuck on a bias. The only potential downfall of this is the high risk entry scenario. If you're not framing your trade correctly, you could be potentially risking a lot more. So that's why it's important to frame your trade correctly. And then bias, you're typically going to have potentially less risk. Because let's say in this example, if I had a bias that was long, let's say it was right in this example, I could wait for this pullback here, wait for the low to form, and then enter as soon as it goes, above here. We're having to risk 5 points. So it's potentially a larger risk. And then with a bias, you're going to be trading on the right side of the curve, the early part of the right side of the curve. So here's your V right here, or curve, whichever way you want to look at it. Right here you're entering, but with trading it like this, you're kind of entering at the top of the V instead. So depending on where your if above and below statements are at, it just kind of depends on that. I'm gonna go ahead and pause the video here because I want you guys to be able to see like the example of this and me doing it in a live market environment. I think that's super important for you guys. So I'm going to pause it, and then once it plays out, I will unpause the video. All right, so here's the update. It is working out very well. Taking one off here just in case of a double top scenario. Yes, double top scenarios exist in the market. They're not always going to run the highs, guys. Don't believe the bullshit. Yes, they do act as a magnet for price later, but if you're in a trade, it does not mean that it won't double top and pull all the way back and break this low and then go lower and then come up and attack the double high tomorrow. All right, so one off. So very good trade, no drawdown. I guess that should be a plus of this kind of way of looking at it, is that it's probably not going to be much drawdown because price is already in that like breaking out stage. So 3 accounts. So there she goes. She's breaking out. Let's go, baby. I'm gonna go ahead and pause it here and then I'll come back and update again. All right, we are now 50 points higher. You can barely tell where we originally had the above and below spot. Beautiful fucking example of it I've ever seen. So you may not be in this trade right now, but me and my peeps have been fucking from here all the way fucking up trading this in Discord, step by step, slide by slide, level by level. So one time frame, what it is and how it works. Let's drop down to a 1 minute here so we can look at it, because it's been one time framing on the 1 minute all the way up as well. So I'm gonna go ahead and exit this here though. I think that's pretty savage pullback. Huge gains here tonight. Okay, so I exited earlier just because it's such a big candle here. Oh man. Fuck, I shouldn't. I'm re-entering here. It continuing to blast up here. And one time frame, and now I'll stay long as in one time frame. So what do I mean by one time frame? So the previous candle's low, let's go to maybe a 2 minute, be a little bit better. Yeah, there you go. So if we look here, we start from right here. Where does the previous candle's low get broken? Let's go through this. I don't think it does for a long time. So let's go right here. Nope. Nope. Right there it did for a second there. So let's go to the 3 minute and see the time frame that it stops and does not do it. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 3-minute candles in a row. The fact is that you can use this. You could have entered right here and stayed in long as you did not get a close below the previous candle's low. And you would have never had one. You still wouldn't have one. So I think it's such a powerful concept. It's something that you can really use to make a lot more money, stay in trades for longer, and especially in trailing drawdown accounts, this is your ultimate tool because it allows you to get out at the best possible price without giving back too much. So the problem with the trailing drawdown is you don't know when to exit, right? Because you don't want to, you want to sell into strength or exit into strength, but you don't want to miss out on upward price action. And this is going to allow you to do that. So I'm going to add on to this here as it keeps pushing up. One time framing continues here. And this is on a 1 minute chart, one time framing. Beautiful. See, look at the power of one time framing here. And let's go. Let's go. All right, there, it broke it. All right, so if there's not a better example of the power of one time framing, I don't know what is. All right, guys, so here is my Discord. If you want to learn more about how I trade and learn from me directly, you're going to want to join my Discord. I do not have any videos showing my half-backed balance strategy on YouTube because they're being stolen from me, all my concepts, and not given any credit or even a shout out or even taught correctly. So I am just like kind of showcasing and teaching basic concepts to you guys here on YouTube, but I'm not going to go into detail about how I'm actually trading. That's going to be in my Discord via live streams where you can ask me questions. You can actually talk to me because I think there's 220 people in here right now. So as of now, I have the ability to answer everyone's questions. Eventually, there'll be so many people where that ability will be gone. So you're probably going to want to join now and hop into that. But you can see here, I'm calling everything out step by step by step for everybody in the Discord to catch these kind of trades with me. It just goes on and on and on. So if you're interested in joining my Discord, I'll put the link in the description. If you want to get funded and not sure which companies you can trust, I had that same problem when I first got into trading. I thought funded trading was like a scam. I didn't believe it was real. And when I first started, there was like no one talking about it. So I unfortunately had to go through a lot of companies and struggle to try to find ones that were legit. And I thought once I found some companies, it'd be helpful for you guys if I gathered them together, verified them all, meaning I went through the evaluation process. I got funded with them, got payouts, and then met with the owners via Zoom. So if you come to my website, verifiedfundingcompanies.com, you can check out, I have about me section that explains my story, like how I started. Um, you can check out the discount page where I have the best discounts in the game with the best funded companies in the game, which the discounts I have are better than anyone in the game, like 90% off. You can also sign up for my Discord here too as well. So that is a wrap, guys. I appreciate you guys watching. I'm not doing any giveaways this month because unfortunately someone figured out how I was doing my codes and stole 12 accounts from me, and I pay for them out of pocket. So I'm not going to go ahead and pay another $300 for this month's codes again. I don't even know if Polnox would give them to me if I asked. So unfortunately, that has been taken away. But next month, I will continue to do them. I would still appreciate it if you guys go ahead and comment and keep engaged with me. I will see you guys in the charts.